good argument for owning productive assets rather than dollars during a period like this.
Hello everyone, welcome to Just Invest Today. And in today's video, we're talking about what to do in the low interest environment. What are we doing about this higher inflation rates and things are just going crazy. There's even articles talking about shadow inflation. So in today's video, we're going to talk about this article. Then we're going to listen to a Warren Buffett clip. Him and Charlie Munger talk about a low interest rate environment, what to do with your money, because it's super key that you at least open your eyes and realize what's happening in the market today. Inflation is at its highest point. It's at like 5.4%. People are not understanding what's happening with your money as it just sits in the bank because you're getting a low interest rate. Soon that might even turn negative. Like, can you imagine? What if that turned negative? Then you're going to be waiting and hoping for someone to come save you, but that's not going to happen. So you have to understand what to do with your money. So in this video, we're just going to talk about it. We're going to see what's happening because the Fed understands that it has to stop buying bonds at some point because it just can't keep on just throwing money into the market, getting it higher and higher and higher. It just doesn't work like that. And then keeping low interest rates, it can't keep that forever. So US inflation accelerated last month to remain at its highest rate in over a decade, with price increases from the pandemic related labor and material shortages rippling through the economy. The Labor Department said last month consumer price index, which measures what consumers pay for goods and services, rose by 5.4%. That is so crazy. Food, energy, September climbed 4%. So we see what's happening. We have supply chain issues. We have a lot of shortages in labor and semiconductors and like supplies. There's like, and even in China, there's energy shortages, and that's kind of contributing to all this inflation here, over there, just everywhere. So we have to realize inflation does really harm your money if you think about it. And when do you think this is gonna end? I don't think it's gonna end in 2-3 years. This is not just transitory. It's just not gonna go away. So you have to understand the environment that we're in, because on top of this inflation, look what we have. Shadow inflation taking place around all of us. So in this article, they basically break it down for us, saying that people don't realize that the consumer index sometimes doesn't take into account the quality of like materials, the quality of products, and what's happening to different services. We understand regular inflation with cars and used cars, whatever. That like if you go to a lot right now and you understand, oh, there's not the supply demand chain is all screwed up. There's a lot more demand, not enough supply, so they have to raise prices. So we see that with a lot of used cars, with a lot of car companies, they're able to raise prices because they have a lot of shortages. But on the other side, we're not realizing that there's shadow inflation. And basically what shadow inflation talks about is stuff like hotels, like services, they're cutting down hours, they're cutting down services. So maybe the cleaning lady doesn't clean as much. Maybe you don't get the same amount of food. And that's what people are complaining even on airplanes. Like, they're not getting the same amount of food. They're getting actually like less of what they used to get. Alcohol, that's getting cut off. So they're cutting off a lot of conveniences, and that's all going down due to shadow inflation, due to labor costs. This is all coming back and hitting the economy. So let's get into it. Let's listen to what Warren Buffett says. He's empathetic about the cause of inflation and what it's doing to your money if it's just sitting in the bank. So let's get into this clip of Warren Buffett and Charlie Munger.
The the problem faced by people who have stayed in cash or cash equivalents or short-term treasuries or whatever, I mean, it is brutal. The loss, if they live off their income, the loss of purchasing power, it's just staggering when you get into these low interest rates. they are huge victims of a low interest policy and a dramatically low interest policy. Basically, I've written, I wrote back in 2008 to own equities. I mean, equities were cheap, and you were almost certain to get killed. In terms of, for at least a while, we had promised that the Fed was going to hold rates very low. So it was a great time to own equities, and I feel sorry for people that have clung to fixed dollar investments, particularly short-term ones, during a period like this. And I don't know what I would do if I were in that position. Imagine having some sum that seemed like a very large amount of money in the past, but a quarter of a percent on $1 million is $2,500 a year, and that is not what people anticipated when they were saving over the years. Well, anybody I've advised, I've always felt that owning businesses certainly made sense, more sense than fixed dollars under most circumstances. Not every time in my life, but probably 90% of the time in my life, it's made more sense than owning fixed dollar investments. And it certainly made dramatic sense in a few years ago when equities were marked down to where they were terrific buys, and where you could see the prospect that fixed dollar investments were going to pay very little for a considerable period of time. And I didn't anticipate that we would see the kind of rates for the extended period that we have already, and I don't know how long it will go on, but it's a real dilemma for people. I get letters